Good afternoon, everybody, or good morning to the west of Australia. My name's Mark Adams. I coordinate ASIC's Innovation Hub and lead our strategic intelligence area. I'm your facilitator for today, as well as presenting later on as well. But before proceeding with the event, I'd like to begin by acknowledging the traditional owners, ongoing connection to and custodianship of the lands on which we meet today, throughout Australia and maybe around the world, and pay my respect to elders past and present. So today is another one of the series of sort of regulator agency meetups, and I was just talking to my colleagues just now. We've tried to do these every 6 or so months. It's been a little while since I think that's happened, so we're trying to restore that cadence of events, and I'm really pleased that there's a number of other agency representatives here today. So I think you'll hear about developments and have matters updated for you, and a great opportunity at the end for some questions and answers. I would like to first welcome Kathy Armour, who is a commissioner at ASIC and really is the sort of sponsor for ASIC's innovation agenda. And I would welcome Kathy to make some opening comments, please.
Thank you, Mark, and hello everyone. Thanks for joining us at this virtual regulator meetup, and I hope everyone is managing to stay safe and well. So, 2020, a year not to be soon forgotten. We all know it's been a year of rapid and constant change, but at the same time we've seen a real acceleration in our shift in Australia towards being a digital economy. And I know that this sentiment is reflected in all our innovative industries. Ernst & Young's Fintech Australia census for 2020 noted that many players within the sector feel that the demand for technical solutions has risen. Really importantly, the mindsets of companies and consumers is changing too, as the awareness for these alternative financial solutions grows. And in Australia, I think we generally do show an appetite for new technologies. Of the estimated 600 regtechs founded around the world, 80 of them reside in Australia. And according to the joint Boston Consulting Group and RegTech Association, looking at Global RegTech Growth Report, Australia's compound annual growth rate in RegTech since 2015 has been 15 percentage points compared to 6% for global growth. So this makes Australia the third largest propagator of RegTech behind the US and the UK. Our expanding RegTech sector and our maturing fintech sector also benefits from the support of our government. In September this year, we saw the Senate Select Committee on Fintech and RegTech release its interim report, and it echoes the sentiments that I've already expressed and adds that fintech has the potential to revolutionise financial services in Australia, increasing competition in the sector and providing better outcomes for consumers. At the same time, the government's enhanced regulatory sandbox was introduced that superseded ASIC's regulatory sandbox. This enhanced regulatory sandbox allows testing of a broader range of financial services and credit activities for up to 24 months. And we'll provide more information on how we at ASIC have implemented the enhanced regulatory sandbox a bit later on this afternoon. In October, the Productivity Commission relayed similar potential for the RegTech sector, highlighting the opportunities to benefit that navigation and monitoring of complex regulatory environments, improving risk-based regulatory approaches and targeting compliance burdens, as well as enabling better monitoring and safely unlocking more uses for data. However, all of this potential doesn't mean that Australian regulators, agencies and industries won't continue to face challenges in the short term. The Senate Select Committee has released a secondary issues paper in hope of understanding how both the sector can seize opportunities with global digitisation and competitiveness in the context of overcoming COVID-19. And the ramifications of COVID still remain, with businesses of all sizes dealing with ongoing hurdles relating to customer acquisition and capital. So it is in tackling these and other challenges that we continue to try and establish the channels like this for collaboration and discussion between regulators and industry. From ASIC's perspective, 2020 has reinforced several of our core principles. That is, our work is all about protecting consumers from harm at a time where there's heightened vulnerability, the importance of maintaining financial system resilience and integrity, to continue to identify, disrupt and deter harmful conduct, and for ourselves to continue our job of building an organisation capability when we are facing such challenging times. And in our work, we do all we can to balance these principles with the pursuit of a fair, strong and efficient financial system. So this means we're very interested in continuing to observe and promote a strong and innovative and ever-developing system. But we're not the only ones. And today, with us sharing their insights and answering your questions, we have Daniel Chipek, I apologise in advance for my mispronunciation of some names, looking at stored value facilities from APRA, Gaurav Jory, outlining trade and investment activities from Austrade, joint representatives from the Office of the Australian Information Commissioner and from the ACCC, who will be talking about the consumer data right. So I look forward to hearing all the presentations, and I'm going to hand back control to Mark. Thank you, everyone, for joining us.
Thank you very much, Kathy, for those opening comments and setting the scene for the presentations just about to follow. So, Slav, if you could help me move through my slides, that would be great. So I'm first cab off the rank, and if you could move to my first slide, Slav, and I'll just quickly indicate I'm just going to briefly touch on these topics. Really, I want to remind people about the role of ASIC's Innovation Hub and how it can assist organisations through providing guidance, update around the enhanced regulatory sandbox that Kathy referred to just touch on crypto products and services, because it's always a perennial favourite for questions and interest. And I wanted to make sure that you were aware of some of the opportunities for fintech and regtech through the Global Financial Innovation Network. So the next slide, please, Slav. So Kathy has already outlined to you some of the statutory objectives and vision of ASIC, and it's against that backdrop that we formed in 2015 a function called the Innovation Hub. And really, it is a virtual engagement with the industry where there's a small team of 3 staff who report to me, who coordinate as agents our engagement and provision of informal assistance with the fintech and regtech communities. And so it is business as usual for ASIC to engage with and consider financial innovation. And our aim is to help fintech startups, scale-ups and regtech firms to navigate the regulatory system. We started with a 5-point approach, and it really does still shape the way that the work of innovation at ASIC operates. But I really want to just focus on the one down the bottom about streamlined approach, where we have an outreach to industry to provide them informal assistance. So if we could go to the next slide, please. So many of you may well be aware, but just to confirm, that ASIC is open to meeting with fintechs and regtech startups and scale-ups to help them understand the regulatory system, and they can consider their issues and options ahead. And there's a simple way of doing this, and I just want to make sure that the community is aware of that. In short, we're asking you to think about the information you may need to provide us and probably do a little bit of regulatory fact-finding on our webpage. But in the end, there's a simple form which we ask you to just complete, and you can make use of a lot of material you've already got. But why do we ask for this information? It just helps us to more efficiently engage with you and to also find the right people in ASIC if informal assistance is the right thing and the next step to meet with you about. And in that form, we ask you about your business, what's the nature of your innovation, how do you think it's benefiting consumers and the markets, and do you have an idea of perhaps some of the regulatory issues that you think you might be facing, which you would like to discuss? And it's with that, the small innovation team works with the business teams within ASIC to see whether informal assistance is apt for you, and if so, to arrange those meetings and conversations. So if we could have the next slide, Slav. This maps out some of the statistics of the work of the Innovation Hub through ASIC until October this year. And you will see down there in the bottom left corner that we have provided informal assistance to over 550 entities. And that number just keeps growing. It's a steady increase. It's slowed down a little bit, probably in the last 6 months or so, but there still is a flow. And this chart gives you a bit of a sense of the kind of inquiries that we receive. So that's just highlighting how many organisations have engaged with ASIC. They may not always walk away thinking, hey, I got everything I need to know from that, and I'm sure some expectations have not been met. But our aim is to try to give pointers and informal assistance from the benefit of our experience. We can't give legal advice and we can't give definitive answers, but it's to help people along the way. So that's my first point, the Innovation Hub. So Slav, if we go to the next slide, I now want to just emphasise the existence of the Enhanced Regulatory Sandbox, which I'm guessing, again, many of you may be aware of, but it is now live. It replaced the ASIC class waiver and has started from the 1st of September. To remind people, what is this kind of sandbox? It is a class waiver for certain limited activities. So you can test a business model, be it financial services or credit activities, with retail clients and wholesale clients, subject to certain limits for a certain duration and subject to certain conditions. So it is, as far as I'm aware, still standing out as the unique sort of class waiver model. It's different from a number of other jurisdictions where entities need to make individual requests for either a limited license or an exemption in order to conduct testing of a business model. So it is in play from 1 September. If I could have the next slide, Slav. So here, I just want to walk through just some of the features briefly to highlight that for you. I will not be able to cover everything, and my focus is just to focus on sort of retail service provision, not wholesale. But this is to whet your appetite and to also highlight some of the changes in the sandbox that happened with the legislative amendments that the government put in place. So who's eligible? Well, it's a big class of entities that can be eligible, and that includes licensed businesses for activities for which they're not licensed or authorised for, and it includes authorised representatives in relation to businesses or activities for which they're not currently authorised for. So that class of entities has increased. The kinds of services that can be conducted has also increased. It's still substantially dealing and advising, but it has now been expanded to include some issuance. And that's for non-cash payment facilities, some credit, and acting as an intermediary for general insurance, potentially under a binder where it could be issued. The class of products and services that could be provided for under the sandbox has also been expanded. It covers a range of products which are new, such as superannuation, life insurance, and international listed securities. So it has grown. The kinds of limits have altered a little too. What hasn't changed is that there's still an overall limit of $5 million in terms of either investments or premiums or cover under or arrangements under the use of the sandbox. The number of retail clients is no longer limited, so you can have as many as you can under that sort of overall limit. For certain classes of activities, there are limits. such as for simple investments like managed investment schemes and securities, it is at $10,000 per retail client. For credit, there are limits as well. Certain kinds of credit are not permitted, such as small amount credit contracts, and the credit needs to be between $2,000 and $25,000 and a duration of no more than 4 years. They're just some of the conditions that exist. For what kind of conditions? Well, many of the conditions that ASIC had under its class waiver have continued. They are the key conduct of business obligations, such as for advice, if you're giving personal advice, to comply with the personal advice obligations and the statement of advice obligation, to also comply with disclosure requirements and the provision of disclosure requirements, as well as to have internal dispute resolution arrangements in, as well as being a member of the Australian Financial Complaints Authority. A change that's also occurred is that the testing can be now for up to 2 years. It was 1 year. But ASIC urges entities that are thinking about obtaining a license after their test to really come to ASIC early, and so that can be up 6 to 9 months before the intended end of your testing. You now can come back to the sandbox more than once. It's still subject to the overall limit of 5 million, and you're able to test new activities which you haven't already tested. So that's a new option as well. But to make use of the sandbox, you also need to meet notification requirements. And can I go to that slide, please, Slav? So there is now a prescribed form requirement, and ASIC has issued that on its webpage. And these are some of the aspects of it. You need to meet fit and proper probity requirements. That's just like what ASIC had. So that includes criminal checks and other forms of checks that are undertaken, and we request information for that. But importantly, the government put in place that you need to meet 2 tests, a net public benefit test and an innovation test, and the prescribed form asks you for information on that. So the net public benefit test really is you must adequately explain why exempting each eligible service or product or credit activity will result in or likely to result in a benefit to the public, such as cheaper costs, more efficient services, and so on. The innovation test requires you to explain why each eligible financial service or product or activity is considered either new or new adaptation or improvement of another service. Now, we know these are difficult questions to answer, and so we are taking a pragmatic approach to the administration of those tests. We have 30 days to assess your notification once it has been received by us, and we have set up internal arrangements with all our business teams to enable us to deal with that within that time frame. So they're the key notification requirements. I should also point out you are required to meet professional indemnity insurance requirements. It's tailored for this kind of context of activity, and I just wanted to point that out to you as well. So against all that backdrop, if I could have the next slide, Slav. The sandbox is there. It stands as a unique sort of sandbox globally. We already have one entity making use of it, a sort of payment model and savings model. An entity did come to us and had an incomplete notification. We're trying to assist that entity to try to submit a more complete notification. We've got a couple in the wings, which we've just started to consider, and our Innovation Hub team is receiving quite a lot of inquiries about the sandbox. So we will see how this goes and whether the enhanced sandbox can assist more businesses to test their business models. So thank you, Slav. If I could have the next slide. Now, there's plenty of information on ASIC's webpage, and I encourage you to go and just search for the sandbox on our webpage, either via the Innovation Hub or otherwise. There's a dedicated information sheet. There's an information graphic, which is on this slide, which can assist you. And you can always approach the Innovation Hub if you've got uncertainties about how the sandbox operates. If I could have the next slide, please, Slav. So quickly, just on the topic of crypto. So when thinking about crypto assets, really it's a digital representation of an asset and typically called tokens. Often they're on blockchain and permissionless versions of those as well. Why does it matter to us at ASIC and globally for regulators when dealing with this topic? Well, these tokens represent a bundle of rights. And the question is, what are those bundle of rights? And depending on what they are, they could well be a financial product, a derivative, a security or a managed investment scheme, or a non-cash payment facility. So it could well be, no matter how the product is described, it fits within our remit. And if so, there's obligations that are required for such kinds of activities. So what are we doing? Well, our aim is to do no more than help you understand where those boundaries may be, and we've issued information sheets on that topic. Again, they can be found on our webpage, information sheet 225 on initial coin offerings and crypto assets, and information sheet 219 on evaluating distributed ledger technology. So again, entities could knock on our door and ask for informal assistance, and quite a lot have on trying to make use of token-based business models. And we also care, obviously, about misleading or deceptive conduct or illegal conduct. And ASIC has had to intervene in a number of instances. This is really important for trust and confidence in the markets, and it's part of our engagement. And this area does never stop. In all the years I've been dealing with it, there's new terms and developments, including stablecoins and DeFi or decentralized finance. And ASIC wishes to try to remain on top of these things as best as possible. We are engaged in a number of regulatory networks domestically and internationally so that we are as well on top of these things as possible so we can engage with businesses on these developments. So that's a very quick snapshot. It may well encourage some questions from those listening. And lastly, if I could have the next slide, Slav, I just wanted to let people know of this creature called the Global Financial Innovation Network. It is a network of regulators and agencies around the globe across all sorts of sectors. It now has about 55 members, including those from North America, Middle East, Europe, and Asia. And what it's offering right at the moment is an opportunity for cross-border testing. So a fintech or regtech firm can make an application via the relevant web page and seek the potential to test across a number of jurisdictions at once. There is a form and there is an assessment process that will be conducted early next year. In short, entities will need to meet the requirements of the relevant jurisdictions in which they wish to test. But I think the key thing here is a willingness for coordination across jurisdictions. And that may be apt for you and your business. So please consider it. The application period for the latest cohort finishes at the end of this calendar year. And there is information on the GFIN web pages to help you navigate what's involved. Okay, so that's plenty from me. I think I just wanted to remind you about the hub, the sandbox, touch on crypto, and this opportunity within GFIN. And that's it for me. It's a good thing I finished on GFIN and all things international. So I will pass over now to Gaurav Jory from Austrade to let us know about some developments in the international aspect. So over to you, Gaurav.
Thank you, Mark, and good afternoon, everybody. So my name's Gaurav Jory. I work for Austrade out of our Sydney office. I'm in our digital technologies sector team, but I focus on fintech, regtech, and the blockchain sectors. So today, I just want to give you a bit of an update of some of Austrade's activities in engaging with the sector and things to keep in mind going forward. There are a couple of initiatives worth noting that I thought it would be useful to update you on. So next slide, please. So firstly, I might just start with a quick overview of Austrade. I know we probably are working with some of you, but some of you may not know who Austrade is, given that unlike most of the other speakers today, we are not a regulator nor a policy agency. So Austrade is the federal government's trade and investment agency. We've got a big international network overseas, and we use the network to help promote Australia's economic interests and to build prosperity for Australia. We do that through two main ways. One, we help build linkages for Australian businesses as they're entering new markets overseas, and we also look to encourage productive investment into Australia as well. As I touched on, we've got 69 offices overseas in 47 markets. If we can just move to the next slide, you'll see a map that gives you a quick summary of where we have offices. So as you can see, a concentration in Asia and then in other major markets around the world. So on to the next slide, please. So how does Austrade engage with the sector? Well, firstly, we work with Australian companies that are entering international markets, and we provide information about developments in international markets. We also promote Australian capability. We tell the story of Australia and all of the great companies and innovation that we're seeing here, and we want people to buy Australian solutions. We also outline the regulatory environment in Australia. So all of the initiatives that Mark has outlined earlier today, these things that we promote to the international community. And we also work with international companies that are looking to set up in Australia as well. On to the next slide, please. So I just thought I'd give you a couple of examples of some recent Austrade activities that we've done in engaging with the sector. And so the first one I thought I would mention is a virtual bootcamp that we ran in collaboration with the team at Blockchain Australia. We ran this program in the last week of October. It was a competitive process where we ended up selecting 7 Australian companies that use blockchain across a whole number of industry verticals, but there were some fintech and regtech companies that were in the cohort. So the program involved a 4-day bootcamp of virtual sessions focused on the Israeli scale-up ecosystem, where we had experts from Israel deliver insights to the Australian group about how to best access venture capital, how to pitch your product, how to deal with regulatory complexity in different markets, how to improve your marketing schemes. And so, the 7 companies came away far better equipped to succeed in international markets. And that was a great collaboration with Blockchain Australia. And I think that just gives you an outline of how we work with some Australian companies and companies like you in the sector. The second example I'd like to briefly mention is actually an event that we're running next week, next Thursday afternoon on the 3rd of December. This goes back to that theme that I mentioned earlier around informing you of key developments in international markets. We're running a webinar about the fintech landscape in India and opportunities there. As I mentioned, our international network, we have relationships with key people in those markets. And so this event, the keynote speaker will be the head of the Mumbai Fintech Hub, who'll give a lot of information about what's happening in fintech in India. So please go to the Austrade website if that's an event that's of interest to you. But we do run events like this regularly, focusing on different markets. Next slide, please. I'd now like to update you on a fintech initiative that was recently announced in the government's budget in October. So the government, as part of its digital business plan, announced an initiative over the next 4 years to boost trade and investment flows in fintech. The funding will come to Austrade, but given it was only announced just a few short weeks ago in the budget, we've not yet determined operationally how the initiative will function and what specific activities we'll be undertaking. We're in the process of engaging with key stakeholders to determine specifically what we'll be doing, but please watch this space and we'll come back to you when we have something more concrete. Nevertheless, there have already been a couple of activities which we've undertaken as part of this initiative. So earlier this week, there was the Fintech Abu Dhabi Fintech event. It was run virtually this year for the first time, and 7 Australian companies were chosen as part of the Global Fintech 100. We've supported those 7 companies, so we've provided them with a briefing before the event to give them a bit of background on doing business in the region and what to expect. And we'll be assisting them after the event as well, helping them sort and understand how to engage with potential partners, collaborators, and how to best focus their endeavours in the region. Austrade is also hosting a virtual pavilion at the Singapore Fintech Festival, which is happening from the 7th of December. We're working very closely with state governments and industry associations to showcase Australia's strength in fintech, as well as to highlight why Australia is an attractive destination for international investment as well. To the next slide. And I'd just like to close by briefly mentioning the Global Business and Talent Attraction Task Force. This was announced in September by the Prime Minister. It's a special task force. It's being led by the Department of Home Affairs, but also Austrade is one of the lead agencies. The task force has identified 3 priority sectors to attract investment and talent into Australia. Those sectors are advanced manufacturing, health, and also financial services and fintech. So the task force is focused on trying to bring large investment projects into Australia, those that bring 250 plus jobs or $250 million of investment and above. But also it's very focused on bringing talent into Australia as well, the best global talent. So I would expect in the coming period, we'll hear more about more streamlined and easier visa processes, and also potentially some news acknowledging that we are all under travel restrictions at the moment. The task force is being led by Peter Verwa, who's the ex-CEO of the Property Council of Australia. He's the Prime Minister's Special Envoy. So I think we're all very excited to see what new developments will come from this task force. So that pretty much concludes my presentation. It's just a quick summary of some key activities that Austrade's been doing with the sector. I know we already engage with many of you, but I would say, given the initiatives that I've mentioned today, we'll be engaging a bit more deeply with the sector. So please go to the Austrade website. You'll see some information on events, activities, information on particular international markets, and we look forward to working with you in the future. So with that, I'll pass back to Mark. Thanks for the opportunity today.
Quite all right, Gaurav, and thank you very much for walking us through that and giving us all a little bit more detail, or as much as you can, on a number of those more recent budget measures as well. So thank you. But this next session, I would like to now introduce Daniel Chipek and Stephanie Brampton, both from APRA, who will talk about the topic of stored value facilities, which is all that more exciting at the moment in the context of developments around various forms of stablecoins and so on. We also have Richard McMahon from ASIC who's joined us, who can also answer any questions. And after this session, we may just take a moment to see if there's any particular questions on this topic, because Richard needs to leave soon after. So with that, I'll pass over to Daniel and Stephanie. Thank you very much.
Thanks, Mark. Hi, everyone. As Mark said, Daniel and myself will give you an update today on reform to the regulatory framework for stored value facilities. Just by way of introduction, the government signalled support for this reform in the 2020 budget, and also has supported the recommendations of the Council of Financial Regulators review of the regulation of stored value facilities in Australia. And this report was also recently made public in the last few weeks. Though reform has actually been in the pipeline for a long time. There was the 2014 Financial System Inquiry, followed by the 2018 Productivity Commission's inquiry into competition in the Australian financial system, and then, of course, most recently, the Council of Financial Regulators specific review into stored value facilities. So I guess there's a lot of background, and there's been a lot of anticipation of changes in this space, so it's exciting to see that all coming to fruition now. APRA is one of 3 regulators responsible for stored value facilities, so we hope to give you today a bit of an overview of the whole framework, but obviously, given Daniel and I are both from APRA, we will emphasise APRA's role more specifically. As Mark said, we do have Richard McMahon with us though, so any questions you have, irrespective of who it relates to, please drop them in the chat bar and we'll try to integrate that as we go through today, but equally can take any questions at the end as well. We do only have 10 minutes, but we hope to give you, on the second slide, a quick overview of what we mean by stored value facilities before taking you through the highlights of the existing framework, what the future regulatory framework might look like, and then finish off with a bit of a discussion about why the reform is important. I don't want to spend a lot of time here anyhow, but just clearly identify what it is that we're talking about. There's a clear differentiation. APRA is a prudential regulator, so the difference between a bank and the services that are offered versus a stored value facility. So the points there, rather than going through them each individually, we would say that it's where a stored value facility provider does not engage in a financial intermediation, and the accounts are not protected under the financial claim scheme. That's a key kind of point of difference there. Within APRA, we refer the language we use as purchase payment facilities. They are a type of stored value facility, and APRA is responsible for authorising purchase payment facilities that conduct banking business. And by banking business, we mean where the payment is repayable on demand in Australian dollars, and where it's widely available for use as a means of payment. So far, PayPal Australia is the only APRA authorised PEPF provider. And just at the bottom there are a couple of examples of what qualifies as stored value facilities and the reason why this regime is so complex. Prepaid cards, travel cards, gift cards, toll accounts, etc. Some types of digital wallets are all regarded as stored value facilities, but for APRA's purposes, only those that conduct banking business are regarded as a purchase payment facility and fall within our regulation. But it just goes to the complexity and the different regulators and the different points of entry into the framework. On to the next slide. The existing regulatory framework, as I indicated, is complex. We have the RBA responsible for the Payment Systems Regulation Act, ASIC under the Corporations Act, and APRA under the Banking Act. It's an ageing framework. It's out of step with a modern financial system, and there are many grey areas and conflicting interpretations, meaning that it's really unclear or there's uncertainties in the way that the legislation, the various pieces of legislation are interpreted. It also then makes it difficult to clearly delineate each regulator's responsibility under this existing framework. That complexity and uncertainty we've found is also a barrier to entry in terms of entry into the system and navigating the regulation that's around it, and so obviously that hinders competition and innovation. It's also out of line with comparable international jurisdictions. We've found from APRA's perspective anyway, even the language that we use is different to our comparable international regulators. For example, the term purchase payment facility is not used elsewhere. Its legislation is commonly elsewhere used as stored value facilities, and there's multiple things there that come under that umbrella. So that is what the framework is. If we move to the next slide, where we're looking to go, is for a start removing purchase payment facilities from terminology within the existing framework and aligning that with what is used internationally. As I mentioned, the federal government support for this reform was supported by the budget this year, and then equally the Minister for Financial Services endorsed the Council of Financial Regulator recommendations for across the framework. Separating the responsibilities for future regulatory responsibles will be aligned with an activity-based framework. APRA will be responsible for large, or it's likely APRA will be responsible for large stored value facility providers that offer a deposit-like product, so it will be quite clear then what actually falls into the APRA remit. Small stored value facilities providers and all other regulation and licensing of payment service providers, etc., will be in a tiered framework depending on the type of activity under ASIC's remit. And RBA will be less involved in the individual entity-specific regulation and more responsible, or retain responsibility only for the oversight of the payment system. Moving on then to the final slide, I will add there as well, from APRA's perspective, We are also moving internally in the meantime. Obviously, this broader reform might take some time, but in adjusting our own prudential framework anyway to kind of move towards the direction that we want. And we hope to be able to publicly consult on that next year. And that's already kind of taking into account the feedback that we've received anyway through all of the various industry-related reviews that have happened to date. And we expect that our framework will be made simpler and targeting the key risks that are identified with each specific or on an entity level basis. There will also, I guess, one extra aspect that will be within APRA's remit that was announced within the Council of Financial Regulator recommendations was a designation mechanism, which would bring certain facilities under APRA's remit if deemed in the public interest. To finish off, why reform is important, I think probably it's quite obvious now by highlighting the challenges and the changes we expect to implement. It's fairly obvious why reform is important, but it's fair to say that the legislation has not kept pace with the development in the industry. So we are wanting to construct something that is flexible and can continue to support innovation into the future and not just plug the existing gaps that have been identified to date. We expect the reform will provide clarity to both industry and regulators. And more broadly, we already know that there are proposals in the pipeline where the current framework just simply isn't fit for purpose, whether that's because of the type of business that doesn't neatly fit anywhere, or perhaps the expected scale or pace of development that would be likely. So the obvious example there, and is noted on the presentation, is Facebook's Libra Novi proposals. Lastly, as I said, we know there's value in industry in aligning our framework with comparable international jurisdictions so that there's some fluidity between countries. And obviously, as I said, that's in terms of adopting similar language terminologies. In addition, probably some interesting points to finish off is flagging along the lines of that alignment with across jurisdictions is the potential lessons we have to learn, even just this year, the Wirecard scandal and the impact that had on European regulation and what we can learn from that, given that fundamental to regulation is obviously the protection of depositors and the product that is offered. And also flagging the People's Bank of China recently announced they're looking at regulation for their large payment providers, for example, WeChat, Alipay. The uptake of those products is significant. So to see that kind of advancement is happening as well is, I guess, timely for our reform also. I will finish up there. Obviously, I don't have the same level of detail that Daniel would have been able to offer in terms of what changes we can make immediately, but any questions?
Thank you, Stephanie, and thank you very much for coming into the breach. I know I can still see Daniel's sign in there, so I wonder if he's come back on. And I know Richard McMahon's here. So there are a couple of questions that have come in, and as I said earlier, let's try to deal with those now because Richard will need to leave us. The first one is, it's really this question: what happens if a stored value facility is not authorised by APRA? So there's a bit in that. It could be one that actually requires APRA authorisation and hasn't received it, or it could also be an element of, well, some of them don't need APRA's authorisation. What does that mean? Do they just need ASIC's authorisation? So maybe, Stephanie, are you able to give a first quick gloss on that?
Yeah, absolutely. So I guess under the current framework and to a certain extent into the expected reformed framework, smaller providers would be first regulated by ASIC, and as they grew in size and fit the definition of what APRA would regulate, then it would be a transition to APRA prudential regulation. But of course, yes, there is an authorisation process to go through that. So if an entity already exists and is already scaling, then I guess what I would say about the authorisation process with APRA is that it's not really a yes or no kind of exercise. Predominantly, it is an iterative process where we work with each individual entity to get them to the point where we would authorise them. So subject to anything kind of seriously neglectful happening. I would expect that it's not about not getting authorised, it's about how long it would take to get authorised. And there are various things that you can do in the meantime to ensure that the risk is mitigated if the authorisation process took longer than expected, for example.
Thanks, Stephanie. Richard, are you able to chime in? Is there a slant to this that you would like to give from the ASIC perspective?
Sure. Thanks, Mark, and thanks for the question. I suppose for facilities that don't meet the threshold for APRA regulation, at the moment, the ASIC regulation looks a lot like the ASIC regulation for other products and services. So businesses may need an Australian financial services licence, and flowing from that have a range of general obligations that go along with having a licence, as well as some specific obligations around sort of conduct and disclosure that are generally in keeping with what applies for other kinds of financial products and services. With the sort of added element that some small-scale facilities don't require a license at all, and ASIC's provided some class-wide waivers to sort of ensure that the framework's sufficiently graduated. The design of the new framework is to some extent a matter for government, but I would expect that in many ways it will look quite similar. So still a financial services license, still many of those sort of general obligations that apply to all licensed firms, possibly with a few tweaks around, say, ensuring that money's held safely. But yes, it's the obligations that apply if you're not yet at the APRA prudential regulation threshold, in keeping with what a financial services business usually needs to do.
Thanks, Richard, and thanks for the question, because I think that unpacked a little bit about the proposed regime more generally. There is another question here, and I think we'll take two more, one on loyalty programs, and maybe I'll direct that to Richard first. Are loyalty programs considered stored value facilities?
Thanks, Mark. I think the general answer there is no, certainly not from ASIC's perspective. I mentioned earlier that we have granted some class-wide waivers, and one of those waivers is for loyalty programs. So there's some guidance on that on our website in Regulatory Guide 185, but generally speaking, those sorts of programs don't require a license from ASIC.
My goodness, there's a few questions have come in, and I'm going to try to do the quick fire, and I'm going to ask Stephanie and Richard to do their very best. Can I mention buy now, pay later, Richard? Where does it fit in the context of stored value facilities? Are you able to quickly answer that one?
Sure. From the ASIC perspective, those typically aren't seen as payments products in, say, the way that a debit card or a stored value card or a bill payment facility are. I suppose, although they're not generally credit for the purposes of the credit legislation, they fall within an exclusion in the financial services framework based around credit. So those typically aren't SVFs or a like sort of facility either.
Thank you. There's a query here, maybe Stephanie and Richard, and blockchain. Does Bitcoin fall within the SF or other forms of, let's say, cryptocurrencies and so on?
I'm happy to go first on that. And Stephanie or Daniel, if you've got anything you want to add, please feel free to jump in. So as Mark mentioned earlier, whether or not a particular kind of crypto asset is a stored value facility or some other kind of financial product will depend on the rights that go along with holding that facility or token or asset. In the Bitcoin context, ASIC's reached the view that those aren't a payment product, and that pretty much turns on the fact that when you hold that facility, you don't have a right to whether or not it can be used as a means of payment depends on the willingness of the other party to accept it as consideration, pretty much. Whether or not that conclusion would hold for every kind of crypto asset is much less clear, because it depends on the nature of those rights and what goes along with them. One final point that I'd make is that we are aware of some products and services that allow people to make payments using crypto assets, irrespective of whether the recipient would accept that as consideration for the product or service. And those sorts of facilities, which typically involve somebody sitting in the middle, those are more likely to be payments products. So it's a long way of saying for Bitcoin, not so much, but it may depend for other things.
Fair enough. Thank you for that. I might just wrap it there, but Stephanie, and I know Daniel's attempted to come back online, was there any closing comment either of you wanted to make on this topic? And thank you, Richard, for answering those questions. Yeah, go ahead, Daniel.
Sorry, I'm back. I've managed to plug back in. Thank you. Right on time. So just to comment on Bitcoin and more generally crypto assets and potentially global stable coins, because I think it's a broad brush that it's worth commenting on. So we're not particularly concerned about Bitcoin per se. That's a payment system. So that's out of our remit. We would be thinking about, for Bitcoin and other stable coins or cryptocurrency, is thinking about how people access those payment coins and via the wallets and the wallet providers. That would be more of a focus for APRA. Under the current regime, I think it would be fair to say that wallet providers for crypto assets wouldn't come under APRA's umbrella. I think on the slide, Stephanie would have covered what we mean, what is in the legislation around purchase payment facilities being widely available as a means of payment. In the new framework, we're obviously aware of proposals. I think we mentioned earlier, Facebook, Libra proposal, other sorts of global stablecoin proposals. We are well aware of those, and we want the new framework to be flexible enough to deal with those sorts of innovations, and in particular the wallet providers that provide access to those payment systems. So we're confident the new framework will be able to do that with the flexibility that we're trying to have in that framework. And there'll be more detail on that next year, but obviously it's an important part of APRA's considerations and the other CFR agencies, is that in general, obviously, as we know, rapid innovation in the payment space, the future per se is clearly unknown. And we do want a framework that's able to deal with those unknown factors in the future with as little disruption as possible in terms of the regulatory community.
Thank you, Daniel. Stephanie, anything else you wanted to make comment on?
Nothing further from me. Thanks, Mark.
Okay, thank you. I appreciate that. And I know there's some other questions on this topic, but maybe there's time later on. But I think this just, again, confirms that interrelationship of payments, stored value, and deposit and transaction accounts that always causes, and with the developments of crypto assets, has causes a lot of interest and queries about clarification of that. So I think it's great that the regulators are hearing that as the stored value facility process proceeds, so that we can all be aware of those demands for clarity as much as possible. So thank you. So now we've got another really exciting topic, and we've got a number of regulators with us. And let me just bring up my agenda again. So on the topic of a consumer data right, from the Office of Australian Information Commissioner, we've got Alexandra Conlon and Stephanie Otto-Repek. And from the ACCC, we've got Natalie Plumridge and Emma Joy. So I think in this next spot, which I think we'll go to roughly 3:15, which leaves us then 15 minutes for further questions and perhaps not on stored value facilities, I pass over, I think, to OAIC first.
That's right. Thank you very much, Mark. Hello, everyone. My name is Alex Coleman, and I'm a director at the Office of the Australian Information Commissioner, working in our Consumer Data Right, or CDR, section. Today, I'll provide a very brief overview of the CDR and the OAIC's role as the regulator of the privacy aspects of the scheme, and run through what the OAIC sees as key privacy obligations under the scheme. I am joined today by my colleague and fellow director, Stephanie Otto-Repek, and we would be very happy to take any questions in the discussion section later on. So to move to the next slide, please. and again, sorry. So I'll just start with a very quick overview of CDR. So CDR is a data portability right, which aims to provide greater choice and control for Australians over how the handling of their data, It allows a consumer to direct a business to securely transfer their data to third parties that are accredited to receive it. Individuals and businesses of all sizes can exercise their right in respect of their own data, and the scheme is being rolled out gradually sector by sector, first in banking and then in energy, as I'm sure you're all aware. The legislative basis for the CDR is set out in Part 4D of the Competition and Consumer Act and is supplemented by the CDR rules. The ACCC regulates the broader aspects of the CDR scheme, while the OAIC is responsible for regulating the privacy aspects of the scheme. So moving to the next slide. The OAIC can use a range of investigative and enforcement powers available to us under the Competition and Consumer Act, as well as the Privacy Act. First and foremost, the OAIC is the complaint handler of the scheme and can investigate a CDR complaint from individuals and small business consumers, or commence an investigation on our own initiative about an act or practice that might be a breach of a privacy safeguard or a privacy or confidentiality related CDR rule. And I'll talk a little bit more about the safeguards in just a moment. The OAIC's enforcement powers also include the ability to make public determinations, to conduct assessments or audits to ensure that entities are complying with their CDR privacy obligations, or in some circumstances apply to the court for an injunction or a civil penalty order. Now, we have developed a CDR regulatory action policy that sets out in much more detail our CDR powers and approach to applying these, which is available on our website. And we have also, together with the ACCC, developed a joint compliance and enforcement policy, which is available on the CDR website. The joint policy is intended to help consumers and CDR participants understand the approach we will take to encourage compliance and prevent breaches of the regulatory framework. The joint approach is focused on preventing and addressing consumer harm and ensuring the effective, efficient and lawful operation of the scheme. So moving to the next slide, please. So I referred to the privacy safeguards earlier. Now, these are the statutory obligations set out in the Competition and Consumer Act that are supplemented by the CDR rules. The safeguards aim to protect CDR data through the information cycle and outline the privacy rights and obligations for participants in the system. There are 13 safeguards, and these broadly reflect the 13 existing Australian privacy principles, or APPs, that are contained in the Privacy Act. However, the privacy safeguards and the CDR rules are generally more prescriptive than the APPs, which are principles-based. The OAIC has published CDR privacy safeguard guidelines, which outline how we will interpret and apply the safeguards. So now to the next slide, please, just to focus in on what we see as the key privacy obligations under CDR and how to meet them. The starting point to understanding obligations for CDR is at Privacy Safeguard 1, which requires open and transparent management of CDR data. So this requires an entity to take reasonable steps to implement practices and procedures to ensure they comply with the CDR and can deal with inquiries and receive complaints from a consumer. As part of Privacy Safeguard 1, all CDR entities must have a clearly expressed and up-to-date policy about how they will manage CDR data. Chapter 1 of the guidelines provides guidance on general compliance, and we've also created a separate guide to developing a CDR policy. In addition to the privacy safeguards, the CDR rules contain a number of privacy obligations which entities must comply with. For example, providing consumers with access to copies of their records when they request it, regular reporting obligations to comply with Privacy Safeguard 12, which is the safeguard that's focused on the security of CDR data, and also providing privacy and security training to staff. Participants also need to have regard to the data standards and the consumer experience, or CX, guidelines developed by Data 61 where relevant. This is because the CDR rules require data to be transferred in accordance with relevant data standards, and a participant's processes for seeking consent or authorization need to have regard to the CX guidelines as well. The OAIC has developed comprehensive guidance and web content for participants on the privacy safeguards, on privacy obligations more generally, the consent and authorization processes, and the consumer complaints process. And finally, moving to the next slide. As the complaint handler of the scheme, we also wanted to note to everyone that data holders and accredited data recipients must have internal dispute resolution or IDR processes that meet the IDR requirements under ASIC's Regulatory Guide 165 on internal and external dispute resolution. So consumers should first complain to the relevant entity, and if they're unable to resolve the complaint, they can make a complaint via the CDR website. The CDR scheme also applies a no wrong door approach to help consumers find the right entity to respond to their inquiry or complaint. So in practice, this means that if the OAIC or the ACCC, as co-regulators of the scheme, receive a matter that is best dealt with by the other regulator or by an external dispute resolution scheme, the matter would then be transferred across to that body. So that brings me to the end of this very brief presentation. And as you will see on the final slide just here, we have listed links to some of our key resources that I have referred to, so you can access those when a copy of this presentation becomes available. So I think I'll hand back over to you, Mark.
Thank you very much, Alexandra, and thank you for very briefly highlighting, I think, the things that people need to bear in mind around privacy and CDR. How about we now supplement that with a bit of a brief update from ACCC. So can I pass to Natalie or Emma, please?
Thanks, Mark. It's Natalie here. So
thank you.
Good afternoon, everyone. So my name is Natalie Plumridge, Director of Accreditation, and also joining me from the ACCC today is my colleague Emma Joy, who's leading onboarding. So today our aim is to give you a brief overview and update on the accreditation and onboarding processes, as well as identify relevant guidance material for you and avenues for you to engage with us further if you're interested. So we can move to the next slide. So this provides an overview of accreditation and onboarding. So data holders and prospective data recipients must go through similar but distinct processes to ensure that they are ready to join the CDR system. Both data holders and prospective data recipients must first create a CDR participant portal account. This requires providing information about your organisation as well as an identity verification process for the relevant person creating the account. Once a participant has access to the CDR participant portal, data holders will be required to register to join the CDR system, whereas prospective data recipients will need to submit an accreditation application. Upon successful registration and/or accreditation, participants will then progress through onboarding and the conformance test suite, which I'll let Emma talk through shortly. Following completion of the onboarding processes, participants will be able to share and receive data with consumers' consent in the CDR system. So if we hop onto the next slide, so the accreditation process is designed to ensure that data recipients can be trusted to securely handle CDR data when they join the CDR ecosystem. This is so that consumers can have trust and confidence in the regime. Any entity in Australia or overseas who wishes to receive CDR data to provide its products or services to consumers under the regime must be accredited. There is currently one tier of accreditation, the unrestricted tier, and this is intended to be the highest tier of accreditation for the CDR regime. Entities accredited at the unrestricted tier will be able to receive all data sets and data for each sector as more sectors come on board. And there are additional tiers of accreditation which are intended to be included in the future as the CDR develops, and consultation on tiers form part of our recent consultation on the CDR rules. In terms of applying for accreditation, we encourage applicants to read the accreditation guidelines as well as supplementary guides to assist with preparing their application so that they can understand the information required to be provided. And we also have a sample accreditation application form available for review on the CDR website, which will give an overview of that as well. In terms of where we're at now for accreditation, one of our main focuses is on widening the pool of accredited data recipients to increase the exposure of the consumer data right and the amount of services available to consumers. To date, we have 6 accredited data recipients with a further 6 accreditation applications under assessment and then a further still 49 applications in development. So these businesses include accounting services, digital identity, lending, bill payment management, budgeting, payroll management, comparison services, and technology services. So we're looking forward to seeing the value propositions they'll be able to offer consumers in the coming months. We have also introduced and have under development a number of initiatives to expand the consumer data right regime to facilitate entry and more use cases. So amendments have been made to the consumer data rules permitting the use of accredited intermediaries to collect data. These amended rules means accredited businesses can now ask other accredited businesses to obtain consumer data on their behalf with consumer consent. And our rules team are also currently developing further amendments to the rules after our most recent consultation round, which ran from 30 September to 29 October. And these amendments are intended to facilitate tiered accreditation, transfer of CDR data between accredited data recipients, disclosure to non-accredited persons, increased flexibility for joint account holders, and extending the framework to include business customers. So that's it from me. I might hand over now to Emma to give you an overview of onboarding.
Thank you, Natalie. Hi, everyone. My name is Emma. As Natalie mentioned, I lead the onboarding team within the ACCC for CDR. So, onboarding, to talk about that. Onboarding, I guess, is best described as the activity where we, or the participant, I should say, performs a number of tactical activities that actually step them through a series of processes to eventually become live in the ecosystem. If we just focus on ADIs at the moment, or what we commonly call banks, credit unions, etc., we've got about 90 of those to process through the onboarding activity by the 1st of July next year. This is to meet the first major obligation for them under the CDR rules. So if we think about that, there's about 15 of those per month for the whole of the first half of next year. We need to actually step through a process of, for example, signing legal agreements, gathering some key data about their organisation that we need to use to connect them up to the register, to performing the CTS testing, performance testing in the performance test suite, to making sure that they're ready in their production environments, and they're approved by the CDR register, that they've actually met all of the requirements we have for them, and then actually helping them launch and become live. So that's quite a lot of activity when we compare that to the fact that so far we have onboarded 4 the big 4 banks, plus just this week our first major ADI as well. So in our space, the focus at the moment has very much been around really strengthening that onboarding function and facility, around taking a lot of activity around recruitment at the moment, and also forecasting of demand so that we can help actually support the demand that we're going to get through the first half of next year. We are, of course, not naive enough to think that we'll nicely get 15 ADIs every month plus a scattering of data recipients. We know that the banks and credit unions are under immense pressure to deliver. They've got quite challenging dates, so we're fully expecting that the volume to be much higher towards the middle of the year. And we're working very, very closely with the ADIs to help manage this effectively. So we're reaching out to them individually, helping educate them on what this process is and the steps that they will need to perform, and also helping them to understand which steps they can actually complete now while they're undergoing the build and development activities for the CDR tech platforms. In the last 3 weeks, we've had 2 data recipients come through that process. As mentioned, we've also had our first major data holder, so certainly the door is open and participants are starting to come through this new process. And we are very much focusing on just really battening down hatches and getting ready to help a large number of participants out there navigate this through the first half of next year. Next slide, please, Scott. Thank you. Reference material. So there's an awful lot of reference material that we've got out there. There's a very comprehensive list on this page to the areas that Natalie talked about. There's very comprehensive guides that have been published that will help data recipients step through that whole accreditation process. They're all listed there. We have also recently defined and delivered an onboarding guide. Again, it's also very detailed. We have, as a whole, where possible, tried very hard to produce documentation that provides step-by-step guidance to make this as simple and easy to understand as possible for any participants who are actually going through any of these processes. The performance test suite, there's also a large amount of material available on that, with more to come over the next couple of weeks as well. Thanks, Love. And just finally, so we've got various communications channels out there, different ways that participants can keep in touch with us. There's a support portal, which is run by the Data Standards Board. That portal offers a large number of different FAQs, guides, articles on CDR. It also offers a ticketing desk there where anyone's got a question can raise a ticket and have an answer provided back to them. There's a weekly implementation call which is hosted. That call also focuses on any questions, queries that people have got, hot topics that we want to put a spotlight on in terms of education. There's a weekly newsletter that's published and goes out there. Then there's also other factors such as the CDR website. There's also a GitHub site full of those out there if you really like to get out into the technical nitty-gritty of what's going on as well. So there's plenty of support areas out there, and as with anything that's in its sort of, I suppose, earlier stages, we're still working through the process of evolving and maturing the information on that as things move on. Next slide. Mark, I might hand back to you unless there's any immediate questions.
Thank you, Emma, and thank you, Natalie. I think we'll move into the general questions section, and there are some, I can see there's a couple of questions on CDR. So I'm just going to ask people again, if you've got a query, please use the chat room facility function. Okay, so thank you very much, all of you, for that update on CDR. And as you've all done, you've just really highlighted where the information is and highlighted that this is getting real. And that's very exciting to see what the developments will be. So now we move into the Q&A, and maybe I'll just continue to facilitate those a little bit. So I was going to touch on a couple that came in on the sandbox. Well, firstly, there was a question about digital identity. I'm sorry, I'm not going to ask anyone here to touch on digital identity. Austrade were not able to join us today, so we will let Sarah Beattie know about those queries, but that's where I suggest that you direct your queries around digital identity to Austrade. But on the sandbox, there were a couple of queries. One was around its interrelationship with open banking. So let me just perhaps give a perspective from myself, and it may be that either the ACCC or OAIC have a perspective. So the Enhanced Regulatory Sandbox is an exemption from licensing under the ASIC administered laws. So that's a financial services license or a credit license for certain limited activities. So on its face, it doesn't directly deal with the question of what authorizations are needed in relation to the open banking framework. And it may be that ACCC and OAIC can confirm, that whether the status of being licensed by ASIC, has direct flow-on effects for some of the authorizations under CDR. But obviously, if you are in the sandbox, you wouldn't have those authorizations, so they wouldn't be triggered for any recognition under the CDR framework. So that's my quick comment on that. Did anyone from the ACCC or OAIC want to make a comment on that?
Mark, it's Emma. Just perhaps wondering whether there's a slightly different slant to the question, which is, can that sandbox be used to test for CDR? If that's the question, then the answer is no, that's not a testing facility for CDR. I just wondered which way the question had been pitched.
Okay, thank you for that query, for that answer as well, Emma. The second sandbox question is about professional indemnity insurance and when does it apply. So in short, someone who wishes to rely on the sandbox needs to have professional indemnity insurance in place before they commence their business activity. So when a notification is provided to ASIC, we ask, do you have PII in place? Or if not, do you have arrangements in place to have that adequate PII in place? So if it's not in place at the time of notification, and we understand that could well be a practical issue, we can still go ahead and accept the entity into the sandbox, but we're reminding them they need to have that in place, and we will typically follow up and just ask for the entity to provide evidence of having that PII in place. So that's practically how it'll work on that. Now, there are a couple of queries here I can see around CDR, and they're fairly general questions. So again, maybe starting with the OAIC, there's a question about Europe and its GDPR arrangements, and maybe you can just observe on the alignment between Australian standards and perhaps European standards on privacy, and to the degree that the European context was taken into account here. Is someone from the OAIC able to make a general observation on that?
Yes, hi Mark, Stephanie here. I'm happy to provide some general comments on that. I guess the answer to that question is we do consider the GDPR and the implications of that for CDR where we're able to. So the OAIC's role in CDR is the regulator for the privacy aspect. So as you know, there's the Competition and Consumer Act, which sets the basic standards, and then those safeguards within the Act are given, they're fleshed out, if you like, and given detail by the CDR rules, which are developed by the ACCC. So the ACCC has taken the lead in terms of the policy content of those rules, certainly with our help. So it might be something the ACCC would like to comment on as well, but I certainly know in many of the issues that we've discussed with them, we have considered the GDPR to the extent that we can. More broadly in the privacy space, we obviously apply the Privacy Act and the APPs in the clearest way possible, and certainly where there is scope for us to give to take a particular direction, if you like, and where there's a choice, if you like, in terms of the direction we can take, we certainly do consider actively the GDPR obligations. As we know, entities have obligations under other schemes. We're operating in a global environment, and certainly that's a high priority for the Australian Information and Privacy Commissioner to ensure that that Australian businesses are able to operate globally, and that they're aware of their regulatory obligations across schemes, and that wherever we can, we provide advice to them that will enable them to comply with all their obligations where that's possible.
Thank you very much for that. Did someone from the ACCC wish to supplement that at all?
No, nothing further from us.
Okay, thank you for that. Another query, and I'm open to whether ACCC or OAIC wish to take this at first instance, maybe the ACCC. There is a question about distributed ledger technology, and to what degree has it been contemplated in, I think, the design of the CDR framework? Any observation you can make on that?
I know I can't comment on that one, Mark. It's Emma. Sorry, that's way out of my remit. I'm not sure whether you're across any of that.
Similarly, I'm happy to take it on notice. So I don't know if Alex or Stephanie, you have anything to comment on for that?
I think we'd also have to take that one notice. Thanks, Mark.
That's quite all right. Let's do that, and we'll work out how to get back to that questioner about that topic. Okay, I'm just watching some of them. There was a supplement about the sandbox and professional indemnity insurance where someone's sort of saying, hang on, when did PII become part of the requirements? Well, it was always part of the ASIC sandbox requirements to have adequate PI, and the same requirement has been followed through into the enhanced regulatory sandbox as well. Okay, now I'm just going to check. Has Slavomir been able to put Sarah Beattie from Austrade on as a panelist in order to answer any questions?
Yes, let me do that right now.
Okay, so whilst you're doing that, there was another sort of stored value facility question, and I'm not sure whether our APRA colleagues can perhaps answer this. Sort of, what about just standard sort of escrow accounts or trust accounts? Are you able to give any answer as to whether they're within the SVF regime? Anyone from APRA still there?
Yeah, hi Mark, it's Daniel. I think you're asking, the question is around our bank accounts or escrow accounts stored value facilities. Is that correct?
Yeah, so our normal bank accounts and SVF escrow accounts, trust accounts. So a variety there. Yep.
So the short answer is any accounts offered by an ADI, as in an authorised deposit taking institution or a bank authorised by APRA, is essentially a bank account, and banks have a full range of prudential requirements to meet. banks do offer stored value accounts, prepaid cards, etc., but there's no additional requirements for banks to meet because they already meet the full set of prudential requirements. So, in terms of those products issued by banks, that's separate and comes under the full range of the prudential standards applicable to those ADIs. Does that answer the question?
Yeah, I think that's pretty good, Daniel. Thank you very much for that.
Thank you. Nice.
Quickly going to another question, then it's maybe here for Austrade, Gaurav. It's a query about whether some of your initiatives that you're involved in, do they cover RegTechs as well? To what degree is RegTech part of the Austrade ambitions? Can you comment on that, Gaurav?
Yes, so it's not confirmed, but I expect RegTech will be covered in that initiative specifically, but also we're currently working with RegTechs and working closely with the RegTech Association.
Okay, thank you very much for that. Now, can I just check, has Sarah Beattie been able to be added as a panellist?
Yes, Mark, I believe I have.
Fantastic, Sarah. Thank you for joining us and thank you for being part of the event. So there's a couple of questions around digital identity and I'm trying to scroll down back to them again. They're really early on.
I have it
Sorry,
here,
have you
Mark.
got them, Slav? You want to ask them?
I have it here. So can anyone speak to using digital identity, such as that coming out of the new DTA funding, to satisfy KYC AML?
And then it goes on to say, my understanding is that the current regs require that the capture and storage of identity information in addition to authenticating the user. So, Sarah, is there anything you're able to wish to highlight on digital identity?
Sure. Thanks, Mark. Thanks for the opportunity to answer the question. With regard to digital identity, you don't actually have to store a copy as such of the identification. You need to perhaps note if it was a digital driver's license, the driver's license number, and perhaps the expiry date, so that you have reference to what it was that you were actually relying on in terms of KYC. So I don't think there's a particular issue with regard to being able to take copies and store. But if I've misinterpreted the question, happy to receive further follow-up.
Thank you, Sarah, and thanks for filling in. I don't think I can provide any further elaboration to that question, so it may be it comes in, but we're about to wind up. I think we have basically exhausted most of the questions here, I think. So I think I will finish there and thank all the audience. Thank you for coming along and thank you for the questions that we've received. I also wish to thank all the panelists for your flexibility today and working with the virtual environment. It generally works, and I really appreciate your involvement. Daniel, you've been able to come in and go out and come back in, and Sarah's been able to be added, so it just shows innovation and its application for these sort of events. So with that then, I just want to probably wish everyone good health for the coming season, and that stay tuned. There will be information from all these agencies and regulators on the things they've mentioned on their relevant websites, and we'll look to try to do another one of these sort of joint things in around 6 months' time. So all the very best to you, and thank you.